Okay. At the time of recording this video, we are about 1.5 hours from the market closing, and AMC is hovering between the flat zone. Let's just call it the flat zone. After being up almost 9% on the day, flirting with the $21 a share. So for the third day in a row, it seems like this is going to continue to be in the green, which is actually a very bullish indicator. But today, I want to bring to you something that actually can add to the fuel based on this momentum we're having on the stock. And it comes from, the inflation data we just had this morning. As a matter of fact, people were not even expecting this inflation data from being this high. That's why market were acting a little bit bipolar. By that I mean, we're waiting 7.1%. The market was expecting 7.1% for the last 12 months, when it comes to prices increasing. But it came out a little bit above that 7.1 mark, 7.5% actually. So still very high for the last 40 years. So this will create a cascade of events into how people are allocating money to stocks within the market. And you can see that if you look at major indexes, they're down. They are down, but for the first half of the trading session, they were kind of flat. At some point, a little bit green, and it was a little bit surprising that market reacted by saying, pretty much we don't care about these inflation. It's gonna affect, our strategies. And then, boom. Next half of the trading session, everything reverted, including AMC with it. Now, when you think about what is actually going to happen here, when it comes to what the Federal Reserve is going to do in order to address this whole situation, we talked about it a lot, but this means again that now the Federal Reserve and Jerome Powell and his colleagues have a lot of confirmation on their hands in order to move ahead and be a little bit more aggressive. Why? Because remember, the number one job of the Federal Reserve is to actually make sure we have full employment. So if the job market is strong, which by the way, we had another indicator this morning telling us that for the third straight week, we have initial jobless claims going down. So it means people are kind of, you have less and less people looking for jobs, So now that the job market seems to still be strong and we have inflation still very high, some people are talking about, for the next March, it's not going to be an increase rate of 0.25%, but actually 0.5%, meaning it's going to be a double the number that a lot of institutions have in mind. As a matter of fact, Bank of America expects a 7 rate hikes this year in order to address inflation, which is continuing to fly high. Personally, I don't think it's going to stick this high, but the point is the Federal Reserve is going to do something sooner rather than later in order to address this. How does it affect AMC play? Well, two ways. First off, this is going to actually help a lot and give a lot more confidence into some of the investors, whether they're retail with a lot of money, whether they are just, suits, Wall Street funds, actually reallocating how they want to put their money to work in the market. Meaning, instead of looking for some certain type of stocks, like the high growth stocks, your futuristic stocks, they're actually going to look for stocks that are cheaper once and for all, but cheaper based on, the ability to provide a lot more upside on the money, on the gain. And that's why when you look at AMC, this is a perfect candidate, and when you look at the filings, you have a lot more institutions still playing with big money into the stock. If you look at the 6 months and you just look, 45, from 45 to now, this is a 57% potential upside on the stock. So this is a really bargaining great opportunity for such people that are looking to have their money work for them while they sleep. You see what I mean? And then second, with interest rates being this high, if you have 7 interest rate hikes, it means pretty much every single week towards the end of this year, interests are going to go up. So when you have a debt and interest rate go up, what happens? You pay more. You pay more interest. You pay more for the service of that debt. And if you are already losing a ton of money on other, it means your valuations, meaning the amount of money you thought you will be able to make is decreasing. That's exactly the situation the short sellers and these hedges are in right now. So it's going to be a lot more difficult for them to not only to sustain the short positions into the stock, but also to explain and justify to the clients how can you still be in this play while on top of losing a ton of money so far, you are going to be paying a lot more in the debt you went on to short sell this stock this much. So if you ask me, this is a perfect storm brewing for AMC to do maybe not the full moon thing we're expecting to be in the short term, but definitely going back to some pretty decent levels when it comes to the share price. So just have to wait and see.